Hey everyone, the market bounced back today up nearly 1%, bouncing off of this 567 level, which has been a support over the last week and a half. We mentioned that in last night's YouTube video. Today we're right back into the top end of this range now, here around the 573 level. You can see this was the largest gamma exposure concentration today. And so the key question is, do we have enough momentum to break out of this resistance here and keep going to the upside? The 575 strike and the 580 strike we've been watching on the upside as possible targets for the end of this upcoming week. And so I think tomorrow's going to be a crucial day to see if we can break out of this range. We're going to be watching for volume, especially near the market open. What is volume looking like at these strikes between 573 and 575?
Yeah, thanks, Anthony. One thing I wanted to point out on the chart, using my Keltner and whole moving average indicators, it's noteworthy that today's the first day we closed above the whole moving average since September 24, and that opens the door to this top Keltner channel at 580. I noticed with that chart you had pulled up earlier that 580 actually still fits within the dealer cluster zone as well. So that kind of an interesting setup going into tomorrow. One other thing that I'll point out is that the VIX, which we mentioned yesterday as being at the potentially, resistance spot at the top of the 2-hour Keltner, well, it did come back in just like we were thinking it might, but I still think it might have more room to go. So, what I see that's kind of interesting is the possibility of maybe the market SPY going up to 580 and the VIX potentially coming back to somewhere between 18 and 20. And we've got FOMC minutes tomorrow. We have, I think it's 6 or 7 Fed speakers, which is kind of insane. So it's like a really busy day where there's going to be a lot of jabbering, and talk from the Fed heads.
Yeah, that's crazy. I mean, 6 or 7 Fed speakers in one day. It's like FOMC overload, especially on the same day where the minutes come out. So we'll see how that turns out tomorrow. Here, looking at the CME Group's Fed Watch tool, if you're not familiar with this is basically the target rate probabilities for a Fed rate cut or rate hike from meeting to meeting. So the next meeting is November 7th, which is about a month away. Last time I checked this, we were approximately 50-50 between a 25 basis point rate cut and a 50 basis point rate cut. Today, we're around 87% for a 50 basis point rate cut. And so, this is pretty significant. I think the market is really expecting a much faster pace of rate cuts than what the Fed has been communicating. And so that's definitely something to watch closely there. And one other area that I'm watching is this Hurricane Milton that's coming down. Estimates already upwards of 175 billion plus in damage. These natural disasters are inflationary events. So I really want to be watching commodities and oil and see how they react this week and next week as this hurricane approaches. And so just coming back to our chart here, even though I think our bias is for a breakout to the upside since we're near the top end of this range, I think the risk still needs to be understood that, it is possible if inflationary type scares come back up this week or, all the Fed speakers tomorrow start sounding more hawkish, this 560 level could come back into play. That is our first target on the downside. And that's why we highlight these levels, especially when we're in a range bound market like this. We want to know if the range breaks out either to the upside or downside, what are the first targets that we need to be aware of? Only with the options market can you put these multiple path dependency type trades on that allows you to profit, despite whichever way the market may go.
Definitely some good things to keep in mind, Anthony. I didn't have any new ideas today, but I did want to go over a couple that we already covered this week that still seem to have the same setup. One of these is Amazon. And just so everybody else knows, we did just place a trade yesterday in Amazon. So we do have long exposure here. You can see from the chart I have pulled up, we have this kind of a rough trend line kind of along this area. So we do want to see this hold. The Keltners are in an uptrend, and we've been consolidating in this price uptrend as well. I really like the odds of seeing this move up from here. And very briefly, we'll take a quick look at the gamma picture, which seems to agree with this as well. We've been consolidating near the zero gamma level. And you can see the light blue, which indicates volume just for today. We had some activity today at 185, 190, 195, and the purple bars are gamma. So we have this big gamma exposure at 190 that I think, looks like a good target.
Yeah, thanks for that, Sean. That's definitely one to watch. I really like Amazon to the upside as well. Another name that I'm watching is Netflix. Netflix had a really nice move today off of this 700 strike here, closing above 720. This is at the top end of this range that Netflix has been trading in for, the last couple of weeks, really sandwiched between this just below 700 and the 720 level. The thing that has my attention is the 750 strike, large gamma exposure concentration. And really, there's large gamma exposure between 720 all the way up to the 750 strike. So I think if we can get a little bit of momentum and break above this 720, 725 range, 750 looks to be the next target. And so that's going to be a play that we're looking at in our community Discord tomorrow, possibly Thursday, to initiate a position in Netflix to the upside. And two other points that I'll just highlight here. If we come down here to our data graph, the GEX intensity gauge is in positive gamma territory. This gauge basically tells us the historical extremes that we see for each particular stock ticker. So when we talk about gamma exposure, these values need to be thought of in reference to historical averages so we can know how positive or negative the actual gamma exposure is. This, for Netflix, this is telling me that market participants and dealers are going to be buying dips, and this is the kind of environment that we want to see for a move to the upside. The gauge on the right side here is volatility. This is our GEX weighted volatility gauge, giving us a reading compared to the past 52 weeks of implied volatility. You can see here we've got pretty decent high implied volatility, which tells me that a premium collection strategy targeting this 720 to 750 range is probably going to be the best play. This is a way to collect some juicy premium and potentially profit as price grinds higher over the next couple of weeks.
All right, Anthony, the last one I'll cover today is Johnson & Johnson, J&J. This is another one that we identified earlier, and it just hasn't made its move yet. Similar to Amazon, we saw a lot of volume at these higher strikes. We have 165 and 170 as significant gamma levels, with 170 being at that dealer cluster zone that we've identified on our dashboard. If we take a quick look at the chart for J&J, we can see that we're just barely holding the whole moving average, which is at 159.61. So we beat that by about 8 cents. It shows the significance of this level. And I'd love to see some sort of a relief bounce here after this kind of long move downward since early September.
By the way, if you guys are interested in accessing our gamma exposure dashboard and our option flow analytics, head on over to geeksoffinance.com. We've got a couple different membership tiers. I'll put a link down in the description below. Also, don't forget you can join our community Discord for free. We've got a lot of great traders talking about market analysis and trade ideas every single day of the week. I'll put a link in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.